And again, talking about today the 5 most dangerous home loans for first-time home buyers. Now, here we go. Number 5, negative amortized loans. Those are loans that you pay pretty much the interest, but it's gaining value. So, for instance, you're paying a low payment. So, if you took a loan for $100,000, it eventually will go up to, I don't know, $105,000 over a 10-year period. You're paying less for the principal. That's why you're paying less on a loan, but instead of paying it down to $95,000, you're actually paying it up to $105,000. The plus side is you get a good payment. The downside is you're going into the hole, meaning you're adding on to the principal. Avoid these, especially for first-time home buyers. Number 4, FHA loans with a very low down payment. Some of these 3.5% or less in some cases if you get some other incentives in there. I'm not going to get into exact details. But yeah, these can be tough. You're owing for these. You have a lot of money that you owe on this, and things can escalate real quickly. By escalating, I mean property taxes. They can go up. They've been going up in California, and we have what is Proposition 13, which limits raising a property tax of 2%, I believe, per year. Also, insurance. What is going on with insurance? These things, along with just a limited budget, you didn't think it was going to be expensive as it was to be a homeowner. Hey, I did it, and it was a while. I remember it was back in 2001. And then all of a sudden we had 9/11. Things were looking real tough. Fortunately, we were able to get through it like everyone else. But gosh, it was a tough time. Okay, number 3, subprime mortgages. These are tough to get involved. I know some people, they don't have an option. I get it. And I apologize for your situation. And I applaud you for getting into the home buyer's market and purchasing your first home. Congratulations. However, they are, and they do, come with a higher interest rates. And I remember in 2009, there were a lot of bad actors in the loan industry and also the real estate industry. And that went to the lenders all the way up to the gamut. The investors, oh gosh, the realtors, even some of the title companies I've heard crazy stories on. Okay, so some prime mortgages can be very risky, especially for first-time home buyers. Okay, number 2, interest only. These loans sound great, 5-10 years, low payments, but guess what? You're not making any dent into the principal. The goal to buy a home is in 30 years or even less is to own the home outright. Well, really, you'll never own the home because you always have to continue to pay property taxes. But this, take now, pay later, well, it comes with a price. And hopefully that price doesn't come with foreclosure like it did back in 2009, 2010 era. So again, number 2, avoid them, especially for first-time home buyers, with interest only. And number 1 thing, the ARM, the adjustable rate mortgage. Oh my God, don't get me going. It sounds great. You got into the house or your home, and you think it's great, you own it. Well, guess what? After 3 or 4 years, when that ARM readjusts to whatever the interest rates are, which you, me, and no one has really control over, well, maybe the Federal Reserve, but I'm not going to go there right now. But those ARM, that dream home can turn into a dream nightmare. Well, again, going back to 2010 as an example, yeah, it did. A lot of people couldn't make the payments once they set to a higher rate, and it was a debacle, to say the least. That's why we do have legislation like Dodd-Frank and a lot of this other ordinances that have gone through that are trying to not have a repeat, but hey, they still have arms, and I get it. People Sophisticated buyers, not even necessarily sophisticated buyers, people that maybe have an adjustable, that maybe have other properties or other assets, they can do that because in 2, 3, 4 years, those assets will be ready to sell and they can pay off that loan or refinance it, hopefully at a better deal with less of a principal. And again, any of these loans can be dangerous. Actually, any loan can be dangerous. You just have to mitigate the risks. Look at the upside, look at the downside, and again, as I keep saying, speak to a real estate professional. Well, if you can, please like and subscribe in the comment section below. And again, don't hate on me. I'm just a man with a mullet and a dream. Thanks a lot. Peace out and goodbye.